Yeah, a bit of a surprise. Clearly, what the market's going to debate is what does this mean for a potential spin out of Cruise? We've been quite adamant that Argo, Ford has publicly talked about seeking publicly finance for it, whereas Mary Barr on the third quarter call, when we pressed her on Cruise, actually said they like it vertically integrated and they like their ownership. So I think that's the takeaway the market's taking from this, but who knows what the real circumstances are.
And back to Rivian and the numbers. I mean, I guess early stages, so the numbers perhaps not the key things yet. But what was your main takeaway?
Two positives. One, a thing that I think is sending the stock down. The positives, pre-orders of 71K. They had 51K as of November. We were looking for an increase, but more into the mid-60s. So this is above our expectation, even tracking the credit card data on the orders. Second, that Georgia plant coming online in 2024. It was in our model and expectation, but to see it locked down this early is a positive. On the other hand, the production ramp, a few hundred short for the quarter, is a short-term concern. It kind of recalls some of the early issues around Tesla. And frankly, I think a lot of the investor base, some of whom were very skeptical of Tesla, including myself, back in those days, are willing to cut Rivian a little bit of more slack for production ramp.
That's exactly where I was going to go with you, Brian. I mean, Tesla has demonstrated perhaps better than none how hard it is to get production off the ground as a new OEM. So how does Rivian learn those lessons from a Tesla, and how is it, maybe not in the next quarter or several quarters, but how does it pull off basically 3 times production ramp, in the sense that it's 3 different vehicles it's simultaneously trying to turn out?
Yeah, it is tougher, and it is something when we toured the factory earlier in the fall, we pressed them on. I'd say a few things. First, they have more modern equipment than Tesla had when it launched the Model S, simply because of that huge cash backing even before the IPO from Amazon and Ford. Second, they have veterans at the plant who both come from Tesla, but also come from established legacy players like Nissan, with well-run established factories that they built in the U.S. So we think it's the right combination of skills from the legacy and from the startup. And then finally, RJ comes from a culture of his back education at MIT, big stress at the MIT program on lean manufacturing, the Toyota approach, the team approach to manufacturing, and they're definitely trying to be leading edge, not bleeding edge on the factory floor. Some of Tesla's problems in the later ramp were trying to over-automate. Things like Shanghai, once they got it down, went much more smoothly. So, it's not great to hear a couple hundred delay. Partly it could be because they're focused on quality, but it does, especially if you do the ramp delays of Tesla in the context, a few hundred in a quarter may not make a big difference a year from now.
But Brian, in terms, that's obviously how they compare to Tesla. What about to the other newer EV entrants? Are they ahead in the curve relative to them, and how significant is having that Amazon partnership?
Well, the Amazon partnership is certainly going to help on the van side. They're still in production, pre-production on that van. In terms of the other startups, Lucid is about roughly the same place. Fisker is outsourcing manufacturing to Magna, so that actually de-risks somewhat the Fisker story. And the legacy companies, they really, shouldn't have the same issues production ramping on making a vehicle, but issues around battery and drivetrains are likely to present themselves.